your asset, liability, both credit card, debit cards, okay, AI, artificial intelligence, technology, MIS, all this is a securitization. All these are the parts of your module B. Okay, module C, marketing related. Everything. Introduction of to marketing, delivery channels, delivery models, customer relationships, service standards, BCSBI. Then MKIS, marketing information system. Module D is wealth. Wealth management, investment management, tax planning, other financial services. And module E, you can call it unofficially. Officially, it's module D only. Housing loan, additional reading. Okay. So there you have appraisal process, housing tax, housing finance and tax planning, mortgage advice, valuation of real properties. All these topics I've just now taken. Okay. You followed it now? Yeah, I'll share the link of WhatsApp. Everyone, those who are watching on YouTube, kindly note, join the class immediately because see this. I'll share this WhatsApp link with you. Everyone, kindly take this WhatsApp link. Join the WhatsApp immediately. Everyone, Tirupati, Amitha, Swati, okay, join the WhatsApp immediately. I'll share today night. I'll share the PDF. After this class, I'll share that PDF which I was talking of. Okay. Yeah. Okay. So after the class, I'll share this PDF. I'll show you this PDFs here. Those who want to see it, I can show you right now also. You can just see this. Okay. This PDF I'll always share. From tomorrow, the class timings are 6 p.m. to 9 p.m. 6 p.m. to 9 p.m. See, this is a PDF I was talking of. It is a 238 pages PDF, but 238 means you can read it in 7 days. But kindly note, all 238 are not to be studied. There are certain questions in this, then there are certain images. So it hardly comes to around total reading material comes to around 150 to 160 pages. So that much you read, and you'll definitely score more than 60. More than 60. I'm guaranteeing you. More than 60. Read the PDF and the classes. In classes, I'll explain you the numericals also over here. Mainly, I'll focus on numericals. In these 7 days, we are having almost 2 to 3 days numericals. Tax planning is difficult. That I'll cover. Theory part, you can read it from this PDF also. Okay? Because you get case studies. YouTube link. Yeah, what YouTube link? I'm also searching. I'm just checking that YouTube link. Huh? Hold on. I'll give you that. Just 1 minute. Take this. Who's this? Take this WhatsApp link. YouTube link also. Okay. I'll share it in the PDF in the WhatsApp group also. Everyone. I'll share it in the WhatsApp group also. Okay. I've shared it in the WhatsApp group also. Everyone. Okay. Got it, everyone? Paid time and YouTube. Paid times here. Paid time I'll give you 6 to 9. It is there because we have to adjust that time. Okay. So that is fixed here 6 to 9. YouTube you can watch it later also because you can get the recorded session also of YouTube. Watch that. Okay. First follow the paid classes because in paid classes we explain you the important concepts over here. Okay. So see this, everyone pay attention. This is your PDF I was talking about. Okay. This is the PDF I was talking about. It contains all your chapters. What I have done is I have taken down all your chapters, gone through your book, entire book. I've gone through your entire book, taken down the important parts over here. Again, then prepared it. Here also, some parts means here. I would suggest you if you don't have time, okay. Yeah. If you don't have time, kindly note. Some of you might be busy in the bank. So what you do, you at least read first two lines, two lines of this whatever I've given in the PDF. Like see this sub SBU approach. Okay, SBU approach. All of you might not be able to focus on this complete thing. So you just focus on the first two lines. That also will be enough for you. Okay, that also will be enough for you. Means at least getting 50-60 marks. Okay, if you study full, you will score more than 70. Same thing about everywhere. See here, everywhere I have given because this PDF is not. I have not got it from means got it somewhere. I have gone through your books, all your books, this complete book Macmillan, and then prepared this PDF. Whatever is important lines from that book, those have been placed over here. Okay. So how many of you are from the earlier classes? Those who are from the earlier classes, target batch and that vision batch, many batches were there now. At that time also I had shared it. So you might have already gone through it, some of you. Has anyone read this PDF up till now? Complete PDF. Once or twice at least. No, only evening. Meena, only evening. Okay? Morning I'm having CIB. So tell me one thing everyone. Has anyone read this PDF from the earlier batches, older batches which we which we have taken? Has anyone gone through the PDF? Those who are older students, okay, through other batches. If you have gone through, no, you should go it fully because at that time also I told you read at least 2 to 3 times. Read at least 2 to 3 times. Okay. No, other subjects are just now, last week, but this paper I had given you long back. Chalo, anyways, even if you have not gone through, kindly go through it now. Okay? Kindly go through it now. See, this is a WhatsApp link. This is a WhatsApp link. Okay? If you have not gone through, go through it now. In 7 days you have, 7 days you can definitely read it. Okay? Yeah. Okay? So this week you have to do it, isn't it? It's a do or die situation, right? So there's no other choice this week. Okay? So you have to go through it. Okay? So go through that PDF. Okay? Now let's start the first chapter directly without wasting any time. Let's do the first chapter today. Okay? Bank, what are banks? Means it's an introduction. I'll move fast in this. Okay? These are we are financial institutions focusing on deposit and this loans, right? What is deposit? What is loan? Here, anyone who's having excess money will be the depositor of the bank. Anyone who has shortage of money will be the borrower of the bank, isn't it? Basic logic. Excess money depositor, less money borrower, isn't it? So, what are the various types of banks? Central bank, cooperative bank, commercial banks, RRBs, LABs, local area banks, right? Small finance banks, neo banks. These are the various types of banks. Okay. Central bank means your RBI. Let's see. See, various types of banking: central bank, cooperative bank, commercial bank, RRB, local area bank, merchant banking, treasury banking, trade finance, investment management, wealth management. Okay, these are all the types of banks. This is the basic structure of banking, right? Banking focuses on individual and firms. Individuals are of two types: retail, like you and me, and entrepreneurial, those who do the business. In entrepreneurial, you have agriculture also and MSME also. See, both are businessmen. Okay. Retail is like you and me, mass retail segment, and then mass and class. Class is always in private banking. Private banking means here you come, here the topic of CRM will be attached. CRM, customer relationship management in class banking. Wealth management, investment management, all these are for class banking. And others are for us, Jandan. Then for companies, it is wholesale banking. We also call it corporate banking. Okay. For MSME firms, we have this the banking for the firms, right? So this is known as corporate banking. Okay. So in retail, you will focus on retail customers and MSMEs. Kindly note. In retail banking, you focus on retail customers like you and me and MSMEs. Okay. Now these are the various types of banks. Already I have told you foreign banks, RRBs, public sector, private sector. See, basically you have two types of bankings, right? One is commercial bank and second is cooperative bank. Commercial banks are of again two, three types. One is nationalized bank, second is private bank, isn't it? And then SFB, you have small finance banks you have nowadays. Payment banks you have nowadays, payment banks. So all these are the types of banks, right? So next, cooperative banks, again you have urban cooperative and state cooperative. Urban cooperative banks and state. Okay, kindly note state cooperative and urban. Now, what is the scheduled bank? This question comes. It was there in your PPB also, which is defined in the second schedule of RBI Act 1934. Okay, so second schedule of RBI Act 1934, and which consists of banks which satisfy the criteria in clause 42 of BR Act 1949. These two you have to remember. Second schedule is of RBI Act 1934. 42, clause 42 is of BR Act 1949. As of 2008-2019, means from that date, minimum paid up capital to set up a bank in India is 500 crores, of which promoter should have at least 51% share. Okay? So earlier, forget this earlier part. Nobody is going to ask you earlier part. This earlier part, let's cancel this. Purana bhul jao, right? Only focus on present. So 500 crores. Minimum capital for setting up this bank in India, commercial bank, is 500 crores. Okay? Of which promoter should have a minimum 15% share. RRBs, regional rural banks, special types of banks. Okay? Started in 1975. Act is 1976. RRB Act 1976. And now the important question in RRB, which comes to you. Important question in RRB is, it is a joint venture between central government, state government and commercial bank. Okay. Any RRB is a combination of central government, state government and commercial bank. Central government takes 50% share. State government takes 15% share, 1-5. Commercial banks takes 35% share. Okay. We have many RRBs over here. Now they are coming up with a new concept. Do you know that what is the new concept of RRB? Do you know the new concept of RRB? What is it? Yes. Who knows it? New concept which has come in. Okay, of RRB. It is one. Anyone? Amalgamation. Anyone knows what is the RRB circular? Latest one. One state, right? What is it? One state, right? One state, one RRB, isn't it? It's there now. Have you read about it? One state, one RRB. Isn't it? Anyone knows? Yes, one state, one RRB. Kindly note, this is the latest circular of one state, one RRB. Okay? So anyone who doesn't know must have this information. One state, one RRB. Okay, this is going to be the future of RRBs now. All the RRBs are going to be merged now with each other. Okay. Next. Local area banks. Now this is similar to your RRB. See this. I'll tell you the basic. RRB is given by public sector bank, commercial bank. This local area bank is sponsored by this private bank. Okay, there are only 4 local area banks. Okay, all of them are in South India. Now this question comes in exam. Otherwise, this has no real banking importance throughout the country. Only 4 RRBs, LABs are there. Okay, coastal local area bank. Now these names are not going to be asked. Nobody will ask you this name. Huh? So only remember 4 LLBs, LABs, and all are in South India. These are organized by private sector banks. Kindly note, these are organized by private sector banks. Got it? Specialized banks. Now, what are these specialized banks? Means Exim Bank, NABARD, SIDBI. Okay, all these are specialized banks. Okay, what do you mean by these specialized banks? These banks don't have branches. They don't do the job of banking. Okay, means saving current FD. They don't do it anything. Have you seen the branch of any this SIDBI? Have you seen the branch of? Have you opened a savings account with SIDBI or any this Exim Bank? Have you opened it? No, no. They don't do anything like this. What do? They give you soft loans. What is soft loan? Soft loan means basically whatever government gives the subsidies or whatever promotion schemes are launched for the new entrepreneurs. Those are given by these banks. Okay, how does it function? See this simple logic I'll tell you. In PMEGP, how does it work? There's a scheme of PMEGP. Okay, employment generation. Normally, in any loan, you have to take 75% is given by the bank, 25% is brought in by the customer margin, right? Normally, any loan. In this specialized banks, what do? This 25% also, they will give you 20% by this specialized bank. NABARD will give you 20% if it's for agri. SIDBI will give 20% if it's for this MSME like this. Okay, and 5% will be brought in by the customer. So the margin of customer reduces to 5% from 25%. Okay, Swarna, what is the query? Again, kindly share the PDF which was discussed in this 10 minutes back. One sec, let me see. Yeah, that PDF I'll share now. Have you joined the link, Swarna? No, Swarna Lekhi. Have you joined the anyone who has joined new just now? Okay, kindly join the WhatsApp group. Huh? Swarna and others, those who have joined just now, 5 minutes back in the class. Kindly join the WhatsApp group. There I'll share this PDF. Okay, chalo, move on. So now these are the special share lecture PDF. Also. No. This is available. See this this lecture PDF is available in the app only. Okay, only in that app. In the this you won't be able to download. Okay. The other PDF which I am giving you personally, okay, which I am saying that 90% paper, that I'll share it in the WhatsApp group. Okay. So move on. SFB, small finance banks. Now these small finance banks are all these Equita small finance, Jana small finance, AU small finance. These all banks you see nowadays, small finance banks, many are there. These are actually private banks, but new age private banks, very new. Their concept is totally different. Name itself, look at this, small finance. Small finance means what? These are smaller banks which have combined together. Okay, many of them have been formed from that this finance companies, this the self-help group finance companies. Okay, many of them have been formed from that only. As the name suggests, this type of bank looks after the micro industries, small farmers, and unorganized sector of the society by providing them loans and financial assistance. Okay, so smaller sectors they look at. Now, the minimum capital is also lesser over here. Minimum equity capital for small finance bank is 200 crores, whereas for the other commercial banks is 500 crores. Okay, except those which are converted from UCBs. If look at this, if three cooperative banks combine and form together one small finance bank, then this criteria is not required. This is required if you are not formed from UCB. If you have opened a separate bank. Okay? Right? Yeah. I joined. No? I'll share the PDF. Okay? Manish, I'll share the PDF in the class after, in the WhatsApp group after the class. Okay? Kindly note. I'll share it after the class so that everyone who joins get it at once only. Okay? At 9 p.m. I'll share it. Payment banks. Now this is also one of the important questions nowadays. Payment banks are this all India Post Payment Bank, Geo Payment Bank, Airtel Payment Bank. All these are banks now. They are not allowed to give the loans. They can't give you the loans. Huh? So again, a newly introduced form of banking, the payment banks have conceptualized by RBI, blah, 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 forget this. People with an account in the payment bank can only deposit up to rupees 2 lakh and cannot apply for loans or credit card under this account. So they cannot apply for loans or credit cards. Okay. These banks can't give you credit cards on their own. Means you will never find this Geo Payments Bank credit card or India Post Payment Bank credit card as of now. Future we don't know. Future RBI might give them the permission. Right now it's not there. Okay. It needs to have minimum paid up capital of 1 billion. Huge, very huge amount. Okay. So it needs to have the minimum paid up capital of 1 billion. Okay. Huge amount. Minimum initial contribution of the promoter to the payment bank to the paid equity capital shall be at least 40% for first 5 years. So for first 5 years, their contribution means Geo company should have 40% of the stake for first 5 years. India Post, government, this is government. So government should have 40% of the stake. Okay. The money received as deposits can be invested in secure government securities only in form of SLR. So these banks cannot give the loans. They have to deposit whatever deposit they get. They have to invest it in government securities only, SLR. Nowhere else are they allowed. This must amount to 75% of the deposit balance. Okay, so whatever is the deposit balance, 75% of that should be invested in government securities. Remaining 25% can be invested in this other commercial banks as FDs, time deposits. Okay. Now payment banks cannot give their own loans, but payment banks can provide a loan through partner banks. Means what? Tomorrow Geo Payment Bank can tie up with SBI for loans. India Post Payment Bank can tie up with PNB for loans. Okay. So this is basic logic. They can provide the loan of their partner banks. They can't provide the loan of their own. Okay. Got it? They can't, very low sound. Okay. They can't provide the loan of their own. Got it, everyone? Neobanks. This is the latest form of banking. This is the latest form of banking. Okay. In neobanks, what do you have? Kindly note. This is a layer bank. Kindly note. This question might come in exam now. Few points about neobanks. Important points. These are digital only banks. Digital only. They don't have a physical branch. They never have a physical branch. They have only one head office. That's it. Okay. All digital. Now, there are many neobanks. Almost 17 neobanks are there. Very simple ones I'll give you. PhonePe. What is PhonePe now? PhonePe is giving the loan on itself. Do you know? Paytm gives the loan. Paytm. So what happens in this? These are neobanks. They don't have the branch, but they give the loans. Okay? They have the deposit also. Whatever this customer, this merchant gets through this PhonePe or Paytm gets directly deposited with through them only. So they know the transactions. They are the layer. They don't have their own account. Like for example, PhonePe. Does PhonePe have its own account? No. What does PhonePe do? PhonePe links the customer, means you and your bank. It links it. So it earns through these transactions. And this transaction, whatever is passed, it judges you, okay, based on your transactions. And based on that, it gives you loans. Okay. So neobanks are digital only banks platform that operate solely online. They don't have physical branch. Okay. Neobanks promise a seamless online experience by bringing in experiential digital layer. Now, what is this? One more layer is brought in. PhonePe is what? Same thing, isn't it? In PhonePe, you can attach your savings account. And so, what is this? This is a new layer created, isn't it? Now, banks use partnership with physical banks. Obviously, any PhonePe can have partnership with other banks to provide loans also. Means tomorrow, PhonePe can tie up with PNB. PhonePe can tie up with Federal Bank. PhonePe can tie up with any bank to give loans to any customer. Okay. In this way, what happens? The bank can also increase the loans, and PhonePe can also get a commission in that, isn't it? These are the new banking systems. Kindly note. See, these are fintech firms. They use AI, artificial intelligence, everywhere. Away. No conventional brick and mortar branch. No brick and mortar. No employee in the branch. Okay. See, this is like the neobanks. Traditional banks, digital banks, neobanks. Bank means brick and mortar, branch. Okay. See, I'll write it for easiness. Traditional means branch. Here, digital means branch plus online. This only online. Simple classification. Okay. Branch, branch plus online and only online. This is the neobank concept. Okay. Now, how does the retail banking give you the profit? Retail banking always gives you the profit. Okay. Maximum 60% of the profit from for the bank is always received through retail banking. Wholesale banking gives you around 25%, means corporate banking. And wealth management gives you around 15%. Okay. In retail banking, the NPAs are also less. NPAs are less in retail banking. Why? Because let's say I'll give you an example. If I'm having 1 crore rupees in corporate banking, I'll give it to only one customer. 1 crore, I'll give it to only one customer. But in retail banking, I'll give this 1 lakh rupees to 100 customers. Okay. So 1 lakh to 100. So what happens in this? All 100 customers will never become NPA at the same time. So the chances of NPA in retail banking are very less as compared to that of the corporate banking. Very less. Okay. So retail segment means what? It is the largest contributor, okay, of income. It generates income through your retail loans and retail deposits. Retail loans means all your home loan, personal loan, consumer loan, car loan, two-wheeler loan, credit cards, all these. Deposit means CASA and FD main. And now you have nowadays, other than your deposits and loans, you have one more enemy of yours. Who's the enemy? One more enemy is there. One is deposits, second is loans, and third enemy is, who's the enemy of yours? TPP, third party. NPA is there. NPA is a regular enemy. NPA is always a enemy of bankers, but third party products, that is also, and more importantly, insurance. Insurance. I don't know. All your banks are less of a bank, more of an insurance company, isn't it? We all bankers are now insurance agents, isn't it? So this is basically the retail banking part. This is also known as personal banking as it serves individuals, but some commercial clients. Some commercial means what? Proprietor, partner, private limited, and sometimes public limited. But that doesn't come generally in retail banking. These three come: proprietor, partner, and private limited. Okay. Revenue from retail banking is roughly around 60 to 70%. Okay. NII, net interest income, is always about 70%. So main income of any bank is through loans, interest, commission, fees. Third, that this is a third TPP product. So that is also heavy nowadays, but it comes to 30% generally in all the banks. Some banks it's very high. For example, if you check HDFC Bank, in HDFC Bank the TPP income is almost around 60 to 70% of it, of their NII. Okay, what is NII? Net interest income. Means what? Loan interest minus deposit interest. Simple. NII equals to loan interest minus deposit interest. This is also called as one more word is there. What is that other word for NII? Anyone tell me? NII other word. In loan interest minus deposit interest. What is the other word for NII? There's one more word which we use. Spread. Very good. Who's this? Rikant. Spread is the other word. Spread. NII and spread. These two are same. Okay. So TPP contributes to around 30%. Evolution of retail banking. Now this is a whole history given. Okay. You can read this. And what you have to importantly read now in this. Don't read many things over here. What you have to read is nationalization. This question was asked in your IEIFS also. I know this. This question was asked in your IEIFS also. This question is there in your PPB also. Isn't it? This evolution of old banks. When were these banks nationalized? Two phases of nationalization, 1969, 1980. Okay? Yeah, Bank of Baroda merger. All these questions here, these two topics, this nationalization years, you must at least remember 1960s and 1980s. Okay? So, all these banks were nationalized. Okay? Before that, they were acting as a corporate banks. Okay? Now the entry of private sector banks. Private sector banks entered in 1994. They started in 1994. Now how did they start? They started after 1991 Narsimham Committee. This you have to remember. Narsimham Committee was in 1991. This committee gave the recommendation that new private sector banks have to be brought in. So what are the private sector banks here? There are two types. One is old private sector banks. Second is new private sector banks. Old means Karur Vaishya Bank, Karnataka Bank. Then some bank was there. One more was there. Many are there. I think so. Federal is also private. Old private. So these are all old private sector banks. And new private sector banks means HDFC, ICICI, IndusInd. Then many are there. Isn't it? This Ratnagar, RBL, isn't it? These are all new private sector banks. From the day one, they brought in the technology. Day one, they started as a single server system. Okay, all these banks when they came in, Axis, Axis very good here. I forgot that name, Axis. So these are all the leading banks. There are many others also, not only these 4 or 5. There are many smaller banks also. So coming back to the point, from the day one, yeah, Kotak Mahindra, correct. Good here. Now the point over here is, kindly note, these private sector banks when they came in, from day one, they started with single server system. Means whatever CBS we are having today, these banks started in 1994. HDFC Bank in 1994 it started with CBS. First day. So that's why they are way ahead in this online banking at that time. Now we all nationalized banks have coped up with that. All of us are under CBS now. Okay. So what are the success? Means what is the requirement for success? Number one, customers needs, knowing the customers needs and channel innovation. Very important part. Customers needs means what? Kindly note, in retail banking, there is a concept called as 80-20 principle. Do you know this? How many of you know 80-20 principle? How many of you know 80-20 principle over here? 80-20. 80-20 principle means 80% of your business comes from 20% of your customers. Kindly note. Okay? Say this. This is 80-20 principle. 80% of your business comes from 20% of your customers, and 20% of the business comes from 80% of the customers. Kindly note, your customers over here in the bank are like this. 20% customers, these are very small, but they give you huge business, huge. They don't come to the branch. They always operate online banking, but they give you major business. 80% of the customers who come to the branch will waste your time, and they will give you only 20% of the business. They will all come to you for, my balance is not there in the bank. Sir, 20 rupees debited, 30 rupees gone. Your bank is a robber. Your bank is cheater. I will go to ombudsman. I will go to RBI. I will go to head office. Where is the manager? I want to know. You all are thieves. You all are robbers. You all loot money. All these things. Isn't it? So 80% of the customers who are in the branch will waste your time. Okay. 20% of the customers will only give you the best business. So you have to focus on those 20 customers. Leave these 80% customers. That's what is the basic logic of banking. Okay. If you keep solving the problems of these 80% customers, they will never end. Never end they will. Your job will means your career will get over, but their problems will never end. So that's why if you have to pay note exchange, yeah, that is the main thing. Note exchange. This note exchange is a headache for the banks here. Who comes when we don't know actually. Right? Note exchange. Very worst thing in banking. Yeah. Good year, Manish. 75, 64, 65. Good year. Passbook printing, complaint. Yeah. All these things will happen. Forget this. You focus on your job only, okay? Gas ka paisa. Now that farmers on the first day, first week of every bank is now farmers week, right? All the farmers will come. वो मोदी का पैसा आया कि नहीं, मोदी का पैसा आया कि नहीं, right? Leave it. Chalo. We have to focus on our subject. So this is basically 80-20 principle, and customers needs and customer innovations are important parts. Needs means you have to know what the customers require. Customer is always one step ahead of you. Kindly note this. In technology, customer is always ahead of you. Channel innovation. You have to change your channels. Our regular aspect that customer will come to the branch is over now. Customer will never come to the branch now. Means at least this 20% customer. He will never come to the branch. Okay? This the customers who will have the huge money will never be. Will somebody having 50 crores in his account or property, will he come and stand in your branch for depositing 100 rupees or 1000 rupees? No. Okay. Definitely, Manish. Follow the. I'll tell you the PDF which I'm giving you, Manish. Okay. Follow this PDF and the classes. You'll definitely clear. You'll go more than 75. Okay. So now, channel innovation, right? So you have to evolve the channels. Direct banking, fastest growing and dominant channel of the future. Okay. Direct banking means going through alternative channels. Product appropriateness means basically you have to provide the products which are required by the customers, not what you have. Okay. And pricing, you have to be competitive in the market. Kindly note, you have to be competitive in the market. Okay. Scoring models for assessing credit worthiness. This is very important nowadays. Civil, not only civil, there are others as well. Means not only civil, there are others. Equifax. Now remember all the four names. Okay. Civil, Equifax, Experian, and that Highmark, CRIF Highmark. Remember this. What you have to remember is the score also. Minimum score is 300, maximum is 900, good score is 700. Okay, for all the four. Okay, you know the names now. These four names: Civil, Experian, CRIF Highmark, okay, and Equifax. Okay, CRIF is also called as Highmark. CRIF Highmark it is called as. So somebody sometimes we call it Highmark, sometimes we call it CRIF. So four are there. Okay, Civil, Experian, Equifax, and Highmark. Okay, I'll give you simple logic of remembering. Two are C, two are E. Civil and CRIF C, Experian and Equifax E. Okay, C and E. Got it? Simple way to remember. So consumer protection environment. Consumer protection environment is heavy nowadays. Every customer has Google in his hand now. Okay, every customer. He'll just type it in Google how to go to ombudsman. That's it. Over. It's that easy now. So that's why consumer protection is become a major tool now. Customer can go against you in any single aspect. Okay. So remember the scores 300, 900 and 700. Okay. Now one question which might be asked to you is of account aggregator. Account aggregator is a new concept coming into the banking. I won't say coming, future. It's not future, it is present. How many of you have seen account aggregator? Has anyone seen account aggregator? Account aggregator is a new business. It is a next step of civil. Next step of civil. Okay. What is the difference between civil and account aggregator? See this. Civil always checks your earlier loans, whether you have repaid it correctly, whether you are become NPA somewhere, whether there is any delay. Civil checks that for loans only. Account aggregator checks for many other things. Means loans also, your investments also. It will check how many mutual funds you are having, what is your insurance investments, how much time do you go to the malls, how many times you go to the malls, how many times you go to the movies, spending, how do you pay your electricity bills, do you pay it on time. It will check, it has the right to check your savings and current accounts. It has the right to check your IT returns. So account aggregator checks everything, and based on that, it will give you the score. Civil gives you only on based on loans, but account aggregator will give you based on your loans and other elements. So that's why account aggregator is now taking over civil within some years. Okay, so that's why this question will be asked to you about account aggregator. Kindly note this. What are the challenges? Same thing. Consumer protection, inadequacy of MIS. MIS means Management Information System. Now, why is MIS inadequate? Because the number of customers are so huge, they are increasing. You don't get all the details immediately of the customers, isn't it? Understanding the KYC AML issues, managing the risk, disruptive new technologies means what? AI and blockchain, artificial intelligence, which has come in into the banking, it will replace many things now. Blockchain is such that if blockchain comes into the banking, your loan process will be hardly of 2 to 3 minutes. It can be that fast. Your housing loan, which takes right now 15 days minimum nowadays, isn't it? Your housing loan, some banks do it in 7 days. Okay, some banks do it in fast 7 days. Some private banks I've seen, HDFC, ICICI, 7 days they sanction, disburse the loan. Nationalized bank generally in 15 days to 1 month in that gap. If blockchain comes in, this home loan can be sanctioned in hardly 2 hours or 3 hours. Disrupt. Disrupt means totally different. Okay. AI is also going to change the whole world. Okay. AI is going to be used everywhere nowadays. And continuing growth. Now you have to be in market in competence here. Every time you see what is the balance sheet of your bank, what is the profit of your bank, since last time has it increased or no? So everyone needs to go into the competition now. You can't keep yourself away from the competition, isn't it? Future, obviously, young Indian professionals are there. So growth, economic superpower, middle class, and financial market reforms. Okay. So we are growing at around 7% now. So that's why we have a huge future. And now the next question over here is e-rupee, CBDC. This is the future of retail banking. CBDC is central bank digital currency. Have the account with CBDC? How many of you personally have the account with CBDC? Anyone has opened account with CBDC? How many of you have opened account with CBDC? Correct? CBDC is the future. Kindly note. CBDC is the future. If you have not opened, kindly open it now. Okay, kindly open it now. Put at least 500 rupees in that CBDC. Okay, kindly open it now because that is going to be the future. Yeah. Keep money. Try using that. Try to get, uh, yeah. Try to get used to it. Okay. Central bank digital currency (CBDC). Those who don't know, kindly go through it. I'll take this. I've given it in the PDF also. Central bank digital currency. Okay, CBDC. It's also called as e-rupee. Okay. Yeah. So CBDC is actually here. CBDC is given by RBI. Okay, we banks are just the distributors of CBDC. There are two types of CBDCs. One is wholesale CBDC, second is retail CBDC. Okay, wholesale CBDC is separate, retail CBDC is separate. Okay, so kindly note, go through it without fail. CBDC. Okay, I have given it in the PDF. Okay, I have given it in the details in PDF, whatever is required by you. Sure, complete CBDC is not required by you. You only require it for exam. Okay. So it is totally issued in digital form. No physical rupee is there. There's no physical rupee. Okay. So all of you go through it. I'll share you that PDF also. Okay. No digital, no physical rupees printed for this CBDC. Okay. Very important part. Now, how much time is there? Yeah, let's continue. 5 minutes are there. Corporate versus retail banking. See, what is the difference between corporate and retail banking? Large number of NPS, less number of NPS. Simple, very first answer. In corporate banking, you have huge number of NPS. In retail banking, you have less number of NPS. Customers are small numbers in corporate. Customers are in large numbers in retail, right? Small number of customers, large number of customers. Narrow client base, huge client base. Large value transactions, small value transactions. Large number of transactions, here also volume is large. Interbank transactions, here it is not interbank, right? Full amount is huge, here amount is small, isn't it? Portfolio or in retail banking is limited to your home loan, personal loan, consumer loan. Here it is corporate banking, it is for big loans, big corporate loans, isn't it? Retail banking is the face of the bank, whereas corporate banking is not the face. Right? We have branches everywhere of retail banking. Do you have a corporate banking branch everywhere in the in the city? No. We have only one corporate banking branch. That also in some main city, isn't it? So, corporate banking is not the visible face. Retail banking is the visible face of the bank. It has branches in major cities, major areas. See the difference between this. In this retail banking, the branch has to be in the main area. So the rent of the branch is more. Corporate banking can be in the far off area also. It shouldn't be in the middle of the city. So the rent on the corporate banking is lesser. Okay? Checking accounts. This question is asked. What is checking account? Checking account means current account. In checking account, the difference between checking account and current account is in current account you allow cash. In checking account you do not allow cash. Okay? So no in checking account you can't deposit cash. You can only have online transactions. In checking account there need not be any minimum balance. Okay? Yeah, minimum 500 crores. Correct. Corporate banking loans start with minimum almost I'll tell you 500 crores. Corporate banking loans. Okay? More than that. More than that. Minimum is 500. Got it? Yeah. Difference. Now this is very common. Okay, minimum 500 crores. Here it is the smaller amount of loans. The loan can go from thousands also in retail banking, right? Your personal loan can be of 10,000 also, isn't it? Consumer loan can be of 7-8,000 also, depending on customer to customer. Transactions volume is huge in corporate banking, also retail. See, here, volume is high in both. Kindly note, volume is high in both. Okay, because you might think that volume is less in corporate banking. No, both corporate and retail banking they have high volumes. Amount is different. Amount is less in retail, amount is more in corporate. Okay. Processing cost. Here retail banking processing cost is high. Okay. Retail corporate it's very less. Why? Because as I told you, first question is rent. Rent of the branch is very high. Okay. Rent of the branch is very high in retail banking, lesser in corporate banking. Similarly, number of employees. In retail banking, you require large number of employees. In corporate banking, you require fewer employees. Okay. Checking account is current account only, Amita. Checking account is current. It is there in, if you want to see now, you'll have to go to some bank. See, I'll give you one name of the bank. Equitas Small Finance Bank. Equitas. Or go to, yeah, Equitas I have seen personally. I have my own checking account with Equitas Bank. That's why I know this. It's simply a current account. Okay. A simple current account without any cash transaction. No cash is allowed in that. Okay. If you put cash, then they'll convert it into current account. And then they'll ask for minimum balance. Okay. Yeah. Take this WhatsApp link, everyone. Take this. Okay. So next, transaction already have just told you. NPAs are lesser in retail banking. NPAs are more in corporate banking. Okay. These are the modules. Now this we'll study it later because this we are having it in technology part also. There I'll show you again. But now how much we are having 1 minute, so we'll study this also. See, there are 4 models, and this is a sure question in exam. Sure, very sure question. There, every RBWM exam will have 2 questions on this. 2. Kindly note, there are 4 models in banking nowadays: horizontally organized, vertically organized, predominantly horizontally organized, and predominantly vertically organized. These are the four models. Okay. In horizontally organized, what happens? The data is shared within the same product. Means home loan will have the data of home loan only. Personal loan will have the data of personal loan only. They will not cross share the data. So sharing of data within other products is zero. That's why this is not a good model for banking. Opposite is this vertically organized. In this, what happens? This is home loan, this is savings account, this is current account, this is personal loan, this is something credit card. All of them have the same database, same customer database. So what happens now? If there are 100 customers of home loan over here, so these 100 are visible to all of them. But same case, if there are 100 customers of home loan over here, they are only visible to home loan. Personal loan can't access these home loan customers. So this is a wrong model. Means gone. It was a model earlier, but in this internet age, this model will not work. This model will work. Common database. Okay, so see this. I have written it over here. Horizontal, product wise. The data is shared product wise. Common data zero. No common data. Vertical, common data. Customer wise. Here important is customer. SIF ID which we have. SIF ID, right? We have this SIF ID. This SIF ID is a part of your vertical model. Your CBS is a part of your vertical model. Your CBS is vertical, isn't it? You can see the account of any home loan customer also, personal loan also, credit card also, right? All these you can see. So this is vertical model. And remaining these two are chiller accounts, chiller models. Means what? Predominantly horizontal. Means what? Some part of this, it is a bit higher. Some part is this is shared with others. Okay, some part is outsourced, some part is shared. Here it was nothing sharing. Now here some part is outsourced or some part is shared. Okay, predominantly horizontal, vertically model. It means what? It is majority this 70% of the data is shared, mostly all. Okay, so basically remember these are the two important ones, horizontal and vertical, and these two are dependent on it. PV is dependent on V, PH is dependent on H, isn't it? So this is the basic model. Okay. Yes. Okay. Classes covered are important topics. Numericals I'll be covering it for 2 days. Okay. No, 1 day only. I think so. 1 day it will be over. Then tax planning I'll be covering for 1 or 2 day, 1 day. Because nowadays we have 3 hours time, na. So that's why in 3 hours this topic can be covered. So one topic can be covered in 3 hours. Okay. Timings are 6 p.m. to 9 p.m. Okay. 6 p.m. to 9 p.m. Share all the WhatsApp PDFs. Yeah, all means which one? These class PDFs are not shared. Huh? Swati, the class PDF which I am taking over here are not shared in the WhatsApp group. These are Adda 24/7 property. Okay. The other PDFs which I am having, I'll share it with you. Okay. The other ones which I am having. Okay. Chalo, let's take a break today. Okay. Chalo, tomorrow 6 p.m. evening. Okay. Bye everyone. And those who are watching 6 to 9. Yeah, 6 to 9. Those who are watching it on YouTube, kindly join the classes ASAP. Okay. Only today is a free class for you. From tomorrow paid. Okay. I'll be sharing the important PDF today also. Now after the class, I'll share it in that WhatsApp group. Okay. Follow that. All the PDFs I'll share. I'm having 4 PDFs. Okay. Chalo, bye.